Hey everyone, good evening. This is Scott McGregor at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. Want to take a look at Heico Corporation. This is ticker HEI. HEI is in the aerospace and defense sector, and as you can see, it's been in a pretty well-defined uptrend for most of the year. Every now and again, we get a test of the 50-day moving average, but the buyers have stepped in time and time again to buy the stock and hold it above that key moving average. Today, we actually had a bit of a dip under the blue line here. That's the 21-day exponential period moving average. But I like the fact that buyers stepped in under the 21-day, establishing this area right around 256 as a pretty clear swing support zone. And they closed it near the high of the day on a nice pickup in volume. Now, I know a lot of stocks have earnings right now, but Heico doesn't have earnings until mid-December. So this is one of those stocks they actually don't have to worry about for a couple of months. So what I would do here from Heico is keep an eye on it for a breakout above this high here. You can see this pretty clear resistance from the other day, right around 267. So I would have an alert just above 267.30 and then look for a strong move through that level coming on volume. Now, that would be a nice follow-through after the couple of week consolidation that the stock has been in. So I hope that video is helpful. If it was, give it a like on YouTube and check out what we're up to over at StockMarketMentor.com. I'll see you next time.